All right, so we talked about, in the last video, we talked about the accrual versus cash basis for revenue-related transactions. So now let's talk about the expense-related transactions. So here we have transaction 4. These are the same 10 transactions that we used in Chapter 3. We're going to use these in Chapter 4 as well. So let's look at transaction number 4. We paid 1 year of rent in advance, $180,000. It tells us, again, $15,000 per month. So pay, though, tells us what? Cash, right? We got rid of some cash. So have we actually used any cost? Have we used any of this $15,000 per month yet? Well, no, because it's December 1st. We won't use any of that until December 31st. So we've not used any of that cost, so we're not going to record any expense. We will only record the expense when it expires, okay? So the way this one would look would be prepaid rent as a debit for $180,000, right? This is your debit. And then you would have cash as your credit for $180,000, okay? That's the way this transaction looks right now. Now, if we look at it from the cash perspective, did we pay cash? Yes, we did. How much was the expense? $180,000, okay? That's not really what's happening here, though, okay? That's why we're using accrual basis accounting, because we won't actually use any of that $180,000 to help us generate revenue until the end of December, right? Then we're going to recognize that $15,000 of that $180,000 helped us generate revenue, okay? So transaction number 5, we purchased supplies on account for $14,000, okay? So again, what's happened? Well, we've purchased supplies, so we've increased our supplies account, and we spent some cash, so we've decreased our cash account. Notice there is no expense here yet, because we're not going to have any expense until December 31st, and we will recalculate. We will say there are $9,000 left in the supplies. So how much wood did we use? Well, we used $5,000 worth of supplies, right? So in this instance, no, we're not going to record any expense here because we have not used any of that resource yet. And then cash basis, again, no, we didn't pay any cash, so we're not going to record it until we actually pay some cash, okay? So transaction number 6, we purchased 15 robotics units as inventory, $750,000, $50,000 per unit, okay? So we purchased the units as inventory. Was there any expense there? Well, no, because it's, again, we're just going to have inventory as our debit. We're increasing this asset, right, for $750,000. Then we paid cash for it. We're going to decrease that asset for $750,000, okay? So was a cost used? Have we used any of this inventory yet? No, not yet. So we're not going to record an expense yet. However, did we pay cash? Yes, we did pay cash. Whoops, sorry, that's a yes with a check mark. So yes, we paid cash. So under cash basis accounting, we're going to record that expense at $750,000, right? So transaction 7, again, this was the more complicated transaction, the most complicated one we'd had this far in the course. And remember, we kind of split this one into 2 parts. We split it into the revenue recognition part, where we said we got sales revenue, we got accounts receivable, right? But then there was that second part, that inventory, the decrease in inventory that we sold, as well as the cost of goods sold, that expense we have to recognize as what it cost us to actually sell this product. So here we go. We're going to look at this. We sold 5 robots again, so that was important for the rev rec, right? We sold it, so we've met our end of the bargain. Okay, but what this tells us here is we have 5 less robots in inventory, right? So we've decreased our inventory and asset by 5. Well, how much is that? Because we don't have our inventory listed as 15 robots, right? We've got it listed as $750,000 worth of robots. We paid $50,000 a piece for them. That 50 times 5, $250,000, right? So that's where we got this number right here. Okay. So are we going to recognize an expense under the accrual basis? Absolutely, because now, once we've sold those, we've gotten rid of that resource. We have used some of that resource to generate revenue. Are we going to record it under the cash basis? No, there was no cash involved in it, right? We expensed that cash, all $750,000 of it, on December 12th when we paid it under the cash basis of accounting, okay? Now you can start to see where you're going to have significantly different numbers based on whether you're using accrual basis or cash basis. And this is why GAAP, again, when you're asked that question, this is why GAAP requires accrual. Okay, it is more accurate. It is more faithful about what's happening in your operations. Okay, so that is why we use accrual basis and not cash basis accounting. Got one more expense to look at here, and that is paying employee salaries of $28,000 for the month of December. But at this point, you guys are pros at this, right? We've already went over several examples. We know that pay is cash, so we've gotten rid of some cash, and we know that if we've used cash, then yes, we're going to recognize the expense for $28,000 when we use cash basis accounting. Now the question is, do we recognize that as an expense in accrual basis? Absolutely, right? This is the end of the month. Okay, December 28th. So we have utilized those employees to help us generate revenue over the course of December. So was a cost used? Was a resource used? Yes, it was. How much? $28,000. Okay. So if you got any questions about those transactions, feel free to contact me and we'll go over them again. I just want to touch again really briefly on why we're doing this, right? It's timing differences. That is the most important thing you need to get out of this right now. It is the timing differences between when expenses and when cash is used. Because of those timing differences, those amounts can be significantly different. And hopefully you saw that. Like you saw in transaction 7 that the cash expense was $750,000, but the accrual expense was only $250,000. I mean, that's a $500,000 difference. You know, if you've only got $1,500,000 in revenue, and you take out $750,000 in expenses from cash, you know, that leaves you $750,000 in net income. And that would be the cash journal entry from number 7, right? But let's say, on the other hand, more accurately, what's really happened is you had $1,500,000 in revenue, and you really only used $250,000 worth of your resource to help generate that revenue. Now you've got a little better looking net income. This is a more accurate net income, right? This is more fair to what's actually happening in our operations, okay? Cash is easy and it's good for small businesses, but once you get to the level of a corporation and you're generating capital through equity, shares, when you're generating capital through debt, you definitely want to be using accrual. And again, that's why GAAP requires it, right? Because it is a faithful representation of what's actually happening. All right, well, if you have any questions on any of that, please give me, I was going to say give me a call, but nobody actually uses phones anymore. You can send me an email or whatever, a message through Blackboard, however you feel most comfortable getting a hold of me.